All right, why don't we start with your word of the day? A lot going on in the global markets and the economy. Pushback from China, pushback from the EU. What is your word of the day?
It's asymmetry. And why asymmetry here? Because I think we've done enough on the downside for now. The longer term questions we can discuss here in a minute, but we look for really three conditions to come together at any, really high climactic moment. We look for indiscriminate selling. I think we certainly had that on Friday. You had 72% of the S&P with a -2 standard deviation move on that day. That is like a 2020, 2008 type reading. We look for sentiment extremes as well. Put call ratios are now finally starting to spike. They had been dormant for weeks. That was a spot of concern for us. Those are now starting to show some stress. And then third, we look for very capitulative price action. You got a surge in new lows on Friday and into yesterday morning. So I think, at least in the near term, those conditions present a very asymmetrical backdrop where downside probably capped from here. And those first rallies out of these levels can be a 10 to 15% move. That gets you to like 5,400 on the S&P.
So you mentioned the calls. What about the puts? Have you seen the ratios change there at all?
Yeah, so put call ratios, so looking at puts divided by calls, have really started to surge. So put volume is very, very active here. You see it with VIX as well. I think we touched 60 yesterday, but more importantly for us, if you look at the VIX curve, so the shape of the term structure, spot VIX is trading something like 25 points above the future contracts. Very unusual environment to be protecting the present at the expense of the future. That's generally a pretty bullish condition, at least in the near term.
What do you make of some of the action that we saw yesterday? SPY seeing its biggest trading day ever. Retail investors putting about $125 billion in the market as well. What do you make of that?
Well, I think it's all reflective of when we talk about sentiment, watch what they do and watch what they say. People have been talking bearishly for weeks, but we never really saw it in the price action until the last couple days. I think the volume data certainly reflects fear. It reflects stress. You did 125 billion plus on SPY yesterday. Also, if you look at the inverse ETF, so the product where you can short S&P or short triple Qs, volumes in there set records yesterday. So I think it reflects, again, this broader sentiment package that has moved more into the constructive camp.
All right, we're talking a lot about equities, but your pick's actually in the bond market.
Yeah. I like the two-year note long here. I know yields bounced yesterday. I think that's short-lived. I think that was some sell what you can type mentality out there. But ultimately, we think the Fed has to go here, and it has to go more than I think people will ultimately expect. 2 yields lower. I think 2 to 3% is not out of the question here. They trade, 3.75 right now.